Okay, I'm going to show you a few functions of the MetaTrader application and also how to use market orders and pending limit orders to open trades, and how to know the amount of pips which will be on your stop loss and how much you will be risking on your account per trade. Okay, so this is your MetaTrader application that you would have downloaded from Play Store or Apple Store. And even from the last video, I showed you that this page that I am on is the quotes page, where you see your list of currencies or other instruments. And then the second page, this one, will be your chart screen, where you see price. And then the third one would be your trade screen, where you actually see the number of trades that you would have opened, where if you go there you would see those open trades. So this is just a demonstration trading account that I was using to practice something, and I'm just closing those trades now. So going back to the quote page, okay, all these are list of currencies. That's euro versus Hong Kong dollar. And then for me to know the actual name of that one, even though I forgot what HUF represents, I'll go on chart. And whenever you open the chart, MetaTrader actually shows you the actual name of the currency pair. And remember, when trading currencies, you don't trade one currency as a single, unless if they are currency indices. But sometimes you will be just trading currency pairs, where you will be trading two currencies, buying one and selling another one. So in that example of euro versus Hungarian forint, if you are to buy that currency pair, you will be buying the euro and you will be selling the forint. Whatever you say you are doing, whether you are buying or selling a currency pair, will be done to the currency on the left, which is the base currency. Your base currency is the one on the left, which is euro there. Then your quote currency is the one on the right. So the base currency will be the one that we said you are either buying or selling, because in trading you can make profit by doing either buy trades or sell trades. In buy trades, you are expecting the price of an instrument to increase in value, and as long as it increases in value from where you opened your trade, which is called the entry, your trade will be going in profit. But if the instrument goes down, your trade will go in a loss. And then you can also make profit in trading by opening sell trades, where you are expecting the price of an instrument to decrease in value. And as long as the price decreases from the entry point of where you opened your trade will be going in profit. But now if price would go up and increase, your sell trade will go in a loss. Okay, so I'm going back to the quotes page again. Now these are exchange rates. Okay, all those two prices on the right side. The reason why there are two prices is because the price which you open the trade with and the one which you close a trade with will be slightly different, with just fractions of a cent. And the difference is called spread, okay, in trading. So it's just like if you are changing money from a money changer, they have the price with which you can buy the US dollar, and then they also have the price which you can sell the US dollar to them. So that difference is a profit of the broker. Okay, it's a commission, but it's nothing really to worry about. It will be actually just fractions of a cent. This page, especially after you just downloaded your MetaTrader, is your main quote list. But these are not the only instruments that your broker will have. So if you want to add the other ones, when on the quote page, you select that plus sign at the top right corner, then you will come to your background quote list, and the broker will actually arrange your instruments in folders, so that when you select those instruments, they will now go to appear on your main quote list. This is an account with XM Broker. These are currencies, the majors, minors, and exotic currency pairs. Major currency pairs are currencies traded against the US dollar from countries which have developed economies. Okay, so example, if I select them, you can actually see some of them here, and then some of them here for XM. They also include currencies not traded with the US dollar, but as long as they are from developed countries. So if you just select on any instrument, like for example, if I select this Euro USD, it then disappears, and then it now comes to the main quote list. And whenever you add something and it comes on the main quote list, it appears at the last page, at the bottom of your screen there. I'm going back to the background quote list. Then your minor currency pairs are currency pairs of countries' currencies not traded against the US dollar and from other countries as well, like those. And then your exotic currency pairs are currencies which are not really traded that much with people. The major currency pairs are the ones most traded by people, and then minor currency pairs are traded more than the exotic currency pairs. Exotic currency pairs usually have currencies from countries which still have developing economies, and some of them may be traded against the US dollar, but they will be maybe from third world countries. Okay, so I'm going back again to the background quote list. So for XM, they also have other types of instruments from different asset classes, like commodities. Okay, for your commodities, you can trade even sugar, coffee, cotton, the instruments will be arranged in different folders. Then you have indices. Indices track the average performance of a group of stocks or shares from a country. So for example, this Aussie 200 that I selected, it had the top 200 performing shares or stocks from Australia. And these are different from derivative indices. Your energies, your oil, gas, you can also trade them. And then you also have the future indices in XM. Those indices were cash indices. Futures, the difference between future instruments and cash instruments is that futures have an expiry date from where after that you will no longer be able to trade them. So for example, this JP 225, which expires in March 22, you will no longer be able to trade it after then. And then these are stocks. Stocks are just like shares. So I'm going to go in the folder of US stocks. It will be easier for you to relate to those. So this can be companies like Adobe, okay, even Amazon, even Alibaba. And XM broker has the advantage that it has 1,200 stocks from which you can trade. Then Exness broker, another broker, has about 250 something stocks. And then you also have cryptocurrencies in XM. These are your Bitcoin, and cryptocurrencies can be traded against the US dollar for XM broker. Then for Exness, they can even be traded with other currencies besides the US dollar. Now, if you don't want to open these folders, and if you are given a signal, you can just type the first 3 letters or even the first 2 letters of your symbol that you want to look for. So for example, if I want to trade GBP CAD, instead of having to remember whether it's in the major or minor folder, I'll just type GBP, and then you can actually see it actually came on my suggestions there. And if you select it, it then disappears and then goes to the main quote list. And signals are just when you are told by a signal provider when to buy a currency or when to sell a currency. So you actually won't have to analyze any charts. That person will do all the analysis for you, and then all you have to do is come and open the trade. So you will receive those signals from the signal group that I gave you. If you have added too many instruments on your main quote list, like maybe about 200 to 300, depending on your phone, or even 400, depending on its size, the MetaTrader application might start to drag. So if you see it causing problems for you, you can select the pen icon for you to edit the instruments on your quote list. And if you select that and want to delete any instruments, you select that bin icon, and then you select the ones that you want to delete. And then if you select the bin icon again, they actually get deleted. And you can always go back to your quote list with that arrow on the top left. Now I'm going to explain about pips. So pips standing for percentage in pip, a percentage in point, are just showing the movement of price, where 1 pip is the smallest change which can happen in the movement of a price. For currencies, most currency pairs, remember we said that currencies are traded in pairs, most of them will have 4 of those big numbers after the comma. And then there are other currency pairs which will have 2 of those big numbers after a comma. So for most currency pairs, which are currency pairs not traded against the Japanese yen, the currency of Japan, JPY, or which are not traded against metals like gold or silver, or which are not traded against some cryptocurrencies and metals, most currency pairs have 4 numbers, 4 big numbers after the comma. That small other little number there is called a pipette, and it's actually a fraction of a pip, and we don't usually use them. So for these 4 main numbers after the comma, a pip, which is 1 single pip on most currency pairs, is the smallest change which can happen on the 4th number after the comma, or the 4th decimal place. So for example, if a price changes from 10.6377 and then price moves to an exchange rate of 10.6378, price would have increased with 1 pip. And then if price moves from an exchange rate of 10.6384 to an exchange rate of 10.6394, price would have moved and increased with 10 pips. And this is for most currency pairs which are not traded against the Japanese yen, metals, some cryptos, and energies. But for currency pairs now traded against the Japanese yen or metals or some cryptos, they will have 2 main numbers after the comma. So in currency pairs like that, a pip will be a smallest change which can happen on the 2nd number after the comma. So if, for example, price changes from an exchange rate of 355.95 and price moves to an exchange rate of 355.95 to 355.93, here price would have decreased with 2 pips. And then if price moves in such instruments from an exchange rate of 355.95 to 356.95, price would have increased with 100 pips. And then remember, I said that these smaller numbers are pipettes. it's a fraction of a pip, like cents in a dollar. And sometimes we might not use them unless if maybe calculating your stop losses and for other calculation. So I think you now see the difference between those with 4 main numbers after the comma and those with 2 numbers after the comma. So that is what pips are. And then if you now look on the left side, okay, of the screen, if you look at these numbers, those numbers show the spread. Remember, I said that spread is the difference between these two sets of numbers, and it shows the commission of the broker for you to open and close a trade. Okay, but it's very, very small amounts of money. So MetaTrader actually shows the spread on these numbers, but it will include the pipettes. So in other words, the difference here in pips, you multiply it by 10 for you to see the spread that is written there, because MetaTrader actually includes the pipettes. And I told you that a pipette, these smaller numbers, are fractions of a pip. It's 1/10, the smallest unit. So whatever number you see there, if you divide it by 10, those are actually the difference in pips of those two exchanges. And if you then, even if you go on the internet and you research the difference between those two exchanges, the other one is called the bid price and the other one is called the ask price. But it's not really necessary for you to remember the terminology, as long as you just know that. So if you want to open a trade or view a chart, you can just select on any instrument that you want. Okay, and when you select that, on new order, you will be opening a trade, and then on chart, you will be viewing your chart. So I actually showed you this on chart, that is where you actually see how price is moving. And I'm not going to talk too much on the chart page because I actually talked about this on the other video on the YouTube channel, on this video, where I was talking about a brief MetaTrader tutorial. Now if you look at this currency, you actually see that the spread is very big, because the price of currency is the one with these two lines, that red line and that green line, the horizontal lines, the one which will have a red badge and that green badge. The currency pairs which I told you, those exotic and those minor currency pairs which are not traded that much with people, which have lower demand, they have big spreads, which are big commissions. Okay, so some of them actually have spreads which are very big, that you won't be able to trade them with trades which last a short duration, like your scalps or some intraday trades. So the reason why I'm saying this is because, let's say for example, if you look, these are candles. I explained this on the other video. They are just showing how price is moving, the movement of price, because we don't use simple line graphs in trading a lot. So the last candle, this one is still forming, and because this is a 30-minute time frame, each candle is formed within 30 minutes and shows where price moved in a period of 30 minutes. But I talked about this. So from that point to that point below there, price moved in a period of 30 minutes on that candle. Now on this candle, which is still forming, where the green line is where price is right now. If I am to open a sell trade where I am expecting price to decrease, and if I open a sell trade, MetaTrader will open my sell trade for me on the red line, even though price is on the green line. So I'll actually open my trade in a loss with the spread, which is the difference between those two lines, which was the difference between those two exchange rates on your quote page. These two exchange rates, where every time you're seeing one on the left, one on the right. So even when studying currency pairs which you would want to trade, maybe you might actually want to focus first with the major currency pairs, because it will be actually easier for you to do your scalp trades. Scalp trades, I gave you the notes on that. They are trades which last from a few minutes to about 30 minutes, and then your intraday trades are day trades which last from a few hours to about the whole day. Okay, so if you look at those GBP USD and Euro USD, those are major currency pairs. If I just select one, you will see that the spread is smaller, and the spread affects you less as you go on higher time frames. Now remember, I was saying that on this 30-minute time frame, price is showing, this candle, this red candle shows where price moved from that point with that price on the right side to that point in a period of 30 minutes. If you select a different time frame, like if I go on the 5-minute time frame, it's showing where price moved on that candle from a price on the right side there, from that point to that point in a period of 5 minutes. These are now 5-minute candles. And for you to change your time frame, you just press anywhere on the chart page, then you choose the one which you want. And I talked about this in the other video. So that's your 1-minute time frame, 15-minute time frame, 30-minute, 1-hour time frame, 4-hour time frame, daily time frame, weekly, and your monthly time frame. And then that icon is your objects, where you can add a horizontal line, vertical line, Fibonacci tool, and then that one where it's written functions, you can add your indicators, and you can also add the indicators with that functions icon on the top of the page. Indicators are just some tools which show the average movement of price over time, and I'll show you how to add them later on. So that's how you change your time frames. And I was saying that if you go to lower time frames, you will see that the spread will affect you more than when you are on higher time frames, because the spread is a fixed number of pips. And if you go on higher time frames like H4, it's like you are going up in the sky and zooming out. It's like you're now looking down from a very high point in the sky, and you are now seeing a broader view of price. So even that spread will now be smaller than if I go down on the 1-minute time frame. So that is what spread is and pips. And then you also have to know that, I also actually told you that currencies, even though if you are using a stop loss of the same number of pips, it might actually be different in terms of distance when you are looking at different currency pairs. Not all currency pairs, but especially as you go in different classes, from the majors to the minors to the exotics. Okay, so that's what I mean when I'll be saying in the group that they have different weights. Because if you open a trade for GBP USD on this distance, maybe for example, price would move with a dollar. But if you open it on a exotic currency pair, sometimes it might, sometimes for the same distance, okay, for the same distance, it might actually move more than a dollar. For the same distance, it might actually move than a dollar, or actually less than a dollar. And the differences actually now become bigger when you now look at different asset classes. Like when you go from forex, which are currencies, to cryptocurrencies, or even when you compare forex with stocks, the weights might actually be different. And when you are looking at different asset classes, like from your forex to metals to cryptocurrencies or to energies, even if you Google on the internet and see that a cryptocurrency like Bitcoin has two numbers after the comma and is said to that a pip is the smallest number is the smallest change which can happen on the second number after the comma. 10 pips in Bitcoin might be a very small distance compared to 10 pips in the currencies. So you really have to remember that. And for you to know the stop loss that you will still use, you can use the method that I gave you in your notes. Yeah, the ones that I posted in the group. So I was saying that you can just open a random trade. So for you to open a trade, you select new order. Okay. And I will explain all the functions there, but right now I just want to show you something. So now when you open a trade, you can select either sell by market or buy by market, which are at the bottom of the screen, buy or sell. So you can just open any one of them. So I just opened the sell. It's a demonstration trading account. Now once you have opened, I'm now okay. So here when I came to the chart page, it was just showing GBP USD because that was the last one that I opened. But you can even open the Euro USD that I opened the trade from here. So you just long press on the position or trade, and then you go to chart on the bottom there, and then it's now opening the chart for fiber. Euro USD is nicknamed fiber, then GBP USD cable. Okay, so on the 1 minute time frame, the spread is big. I'm going to a higher time frame. That red line at the top, which if I press a dot is appearing on the right side, and if I press it disappears, that's a horizontal line which you can use for marking. Okay, so price is there on those two lines, the red and the green line, the difference being your spread. The dash line is where I opened the trade, and you can actually see it's written sell there. Now if you have opened a trade like this, just any random trade, if price later on moves down, maybe let's say to that point, okay, you will now be able to see. Now I'm going on the trade screen. I'm now jumping to the trade screen. You will now be able to see the profit or loss which occurs there, and here you will actually be able to see the change in exchange rate. So on those two numbers in gray on the left, the first one will be the exchange rate, which you opened the trade, and then the second one, which will be changing, will be the current price. So in that other method, I was telling you that whatever number you see there of price, be it profit or loss, you will know that for whatever change has occurred in pips there, it will be the one which will cause whatever profit or loss, which will be written on the right side. So now you will use proportion for you to know how much profit or how much money you would need for your stop loss, be it if it's going to be $1, $2 or whatever. And that will now enable you to know how much of an account you need, so that you only risk 2% or 1% of your account. And I actually showed you that in the other video on my YouTube channel. So if you have a stop loss of $1, you should only, since I teach you to risk only 2% of your account per trade, you will need at least $50 for you to be able to take that trade. So that with your $1 stop loss, you will be risking 2% of your account if you have a $50 account. And if you are someone who wants to risk 1% of your account per trade, you will need an account of at least $100. So you can revise the notes on that. And then here on the trade screen, the one which will be the third one, the amount written balance at the top of the screen is the amount which will be in your account, which was in your account before you opened whatever trades or closed, before you opened whatever trades, yes. And whenever you close the trades, whether they have a loss or profit, it will then change the balance. And I'm going to open another trade so that I show you something, another random trade. Now, the figure on the top left of the screen there is called your float. Float shows the total profit or total loss incurred after adding these two figures, be it's now a bigger profit after you have added both figures in profit, or be it will be a bigger loss. Float will now show the total sum. And then this, obviously, Euro USD is the name of your instrument. Equity is the amount of money left in your account for you to be able to open more trades if your trades are in a loss and have a negative float. If your trades will be in averagely on profit and you have a positive float, your equity will be more than your account balance with whatever float would have been there. If you use the paper icon on the right side of your screen, it will open another trade of the last instrument that you opened a trade. So because the last instrument that I opened a trade was Euro USD, if I select it, it will suggest me to open a trade for Euro USD. So there are three ways in which you can open a trade on MetaTrader. The first one, this one opens a trade of the last instrument that you opened a trade. And then if I go back to the chart page, the second one is where if you select that paper now, it opens a trade of whatever instrument you are viewing on your chart page. And then the third way, if you go to your quote list and you select any instrument, if you select new order, it selects to open a trade of the instrument that you would have selected. So those are the three ways in which you can open a trade. Now I'm actually going to show you exactly how you will be opening a trade. So for this one, if you look at the top there, it actually tells you what currency pairs it is. That's euro versus the Russian currency. And in trading, there are about 4 main things that you are going to adjust when opening a trade. TP is your take profit. It will be your target profit, where you are telling MetaTrader to close the trade when price reaches your target, where you are expecting price to reach. So it will actually be just an exchange rate. If you press the plus or minus sign, it will show you any random figure, and then you can actually erase it and type whatever take profit price you want to put. And then the one on the left is your stop loss, written SL. Now when you are opening, let's say for example a buy trade, you are expecting price to increase, we would have opened our trade there at the entry, and then our target there will be your take profit. Then in the opposite direction, you put what is called a stop loss, where in the event that we fail our prediction and price goes down in the opposite direction, our trade will be closed with a smaller loss at the stop loss level, preventing us from continuing to make a further loss if price continues to decrease. That is a stop loss. And then I also showed you that in the opposite direction, if you are opening a sell trade with your entry there and your take profit there, remember on sell trades you're expecting the price to decrease, your stop loss will now be in the opposite direction. It's always in the opposite direction of your target. So if we fail our prediction and price increases, becoming a loss, because remember we're expecting price to go down, the trade will be closed at the stop loss level with a smaller loss, preventing it to continue making a bigger loss. So if you also press any one of the two, a plus or minus sign on the stop loss, it will just enter any random figure, then you can adjust to whatever stop loss price you want. And you can later on modify these two figures, the take profit and the stop loss, even when your trade is running. I'll show you how. So that's stop loss, take profit, and then the other third thing that you adjust when opening a trade is your lot size. Lot size is determining the amount of currency, stock, or whatever instrument you are buying. It's a setting which allows you to adjust how much money from your account will participate in your trade. You can actually adjust the lot size. So the smaller lot size that you use is the smaller the profits that you get, and then the bigger the lot size that you use is the bigger the profits that you can get. And I actually demonstrated this in the other video of how to know what lot size you should use on your account using proportion. so I won't explain too much on that. If you select the first option there to its right, it increases the lot size with every 100th. And then if you select the second one to its right, it increases the lot size with every 10th. Same applies to the left side, decreases with every 100th on the first option to its left, and then decreases with every 10th on the other option. So that's the third thing. And then the fourth thing that you adjust is your type of order. So market execution is like those trades that I was opening, where you are just opening a buy trade or a sell trade at the current price. And then the other ones that you shall use, there is buy limit and sell limit. Those are called pending orders. A buy limit order is just a trade in which you are telling MetaTrader to open a trade when price would have reached a certain exchange rate or price. So for example, I selected buy limit. You will see that the difference now here from those of market execution is that there is a panel written price. That is where you enter the price of where you want the trade to be opened. So this way you can actually tell MetaTrader to open a trade even when you are asleep or even at work, and you won't have to actually open your phone for you to open the trade. So if you want to open a buy trade and price currently is here, when price reaches the entry point where you want, MetaTrader would then open the trade when price reaches that level as a buy limit. And then when price will increase, MetaTrader will eventually close your trade when you reach your take profit. And then your stop loss will always be wherever you had set the price to be. And then for sell limit, it's just the opposite. You just tell MetaTrader the price where you want it to open your sell trade. And okay, so basic. So once you have for sell limits now and buy limits, at the bottom of the screen, it won't be written buy now or sell now. After you would have entered the price, which makes sense, you would then select place at the bottom of the screen. Right now it's not in black, it's not giving that option at the bottom of the screen because the price that I entered, I think it's above the current price right now. That's why it can put a sell limit, I think. So those are your types of orders: market execution, buy limit, sell limit, and I showed you pips, and also how to add currency pairs, how to know how much your trade will be a stop loss. And you can go to the video on my YouTube channel where I explained how to know what loss size to use on your account using proportion. It will actually help you for you to know how to use proportion to then know what stop loss will now be on your account. And also those other functions of MetaTrader, some of them are on the other video where I explained a brief tutorial of MetaTrader. Here from the trade screen where your trades will be opened, the numbers written there 0.01 are your lot sizes, and you can actually open a lot of trades. Some brokers allow you to open up to 40 trades, some allow you to open even up to 200 positions. And if you want to close a trade, you just long press on any position, any one of those two, and then you select close position, and then you confirm close with profit or close with loss. If you just select that, it then closes. And when your trades are in profit, that price will be blue, but when it will be in a loss, it will be in red, like it was there. And also remember, I told you that the lot size that you use on a trade depends on the size of your account, but I explained that in the proportion video. So for smaller accounts, you are going to use smaller lot sizes. Then for bigger accounts, you can use bigger lot sizes, so that you won't risk too much of your account in case you lose a few trades. If you want to modify the take profit or the stop loss price when a trade is running, you just long press on the position, then you go to modify position, and then you can adjust whatever stop loss price will be written there. There will be a price, or you can adjust whatever take profit is written there, and after you adjust it, you can then select modify at the bottom of your screen, and then after you select modify, it will then change. Okay, so if you have any questions, tell me, but those are just the basic functions of how you will use MetaTrader. And then if you want to switch your account, you go to the menu, those three lines at the top left, then you go to manage accounts, and that one was an XM account. If you had logged in another account like your Xness account, and you select on it, sign in, you will now be in another account. If you want to add another account, you select there. I'll show you that in another video. And if you go to the quote list and go to the background quote list, you actually see that Xness has a different number of instruments. Xness also has what are called forex indicators. They are not currencies, actual currency pairs, although they actually are pairs of currencies. So make sure that you are mindful when you are doing your back test and studies that they might perform different from regular currency pairs. And also they have cryptocurrencies, energies, and fewer stocks than XM broker. So that's all for the basic functions.